today I just want us to touch briefly on job costing, but then majority of the time we'll be looking at process costing. So I hope that's fine. And then next week probably we'll close off on process costing. Job costing. So with job costing, what we'll be achieving after covering this subject is identifying when to use job costing and how to record in the job costing system. Because remember, all these systems, they just help you to know how to allocate your fixed cost, your manufacturing overhead. And then also you need to also know how to calculate your profit or loss per job. Okay? So an overview that we have here is that job costing is a cost system, as I've mentioned. All it does is that it helps you to allocate your fixed cost. It's just that you need to meet the requirements first for you to be able to apply the system. And as I've mentioned, so description of job costing is what will help you to know when is the right time for you to apply this cost system. Then there's flow of documents that needs to be populated or that help you to see to which T accounts to. So there's a flow of documentation that comes with the system because it helps you with recording. And this is the part where I'm talking about, where the manufacturing cost flow, it goes through the ledger accounts, and you need to know how to then allocate it so that it ends up going to your cost of sales, right? So with that being said, product costing system, as I've mentioned, it represents a method in the way that your manufacturing cost for a single product or job or group of products is accumulated, processed, and recorded, which is what I've mentioned, that a costing system, your ABC, all those that we've been learning, they're just helping us to be able to allocate our manufacturing cost to either one product, or it might be a group of products, or it might be a job, which is a job costing system. Then you learn how to process it. Cool. So, two systems that we're going to learn about. It's the job-orientated system, job costing, and process costing. You need to be able to distinguish between the two so that you know when to apply them. Okay, maybe let me just mention what's on the table, then I'll ask you the questions so that you give me examples for both these two cost systems. So the decision to use these two depends on these three elements, because as I've mentioned, you might know the cost systems, but you need to know when to apply them. So one of the variables that you need to take into account is firstly the market. You need to look at the fact that what you're producing, is it a special assignment or a job for a particular client, or is it for the general market? So what you're producing is specific for one client, or is it for the general market? If it is for a particular client, which is what you're producing, it's specific for this client, then you fall under job costing. But if it's for everyone, general, there's no specific target of people that you are looking at. I'm saying, when I say people, I mean person, not people. It will be general market, then it will be under process costing. The next thing that you need to look at is the production. Is your production specialized, or is it in a continuous process? If it is specialized, then it's once off. Then it falls under job. But if it is continuous, then it falls under process costing. And then the product itself, you need to look at the product itself. Is it a specialized product or is it unique? If it is unique, then it falls under job. But if they all look alike, it falls under processing. So what we're saying is that job costing, it's for a particular client, and normally the order is once off, and it's a unique product that you would be producing. Whereas process costing is for the general market. Normally your production process, it's continuous because it's for, they all look alike. So you might as well just use your factories, use whatever machines that you have, because you're producing so many things that are alike. And that would be when you're using process costing. So back to you, I just wanted to ask you guys, what are the instances when, okay, thank you, Stan, for sending out your text. I can see them now. So if I may ask you, when is an instance for you, which product would you associate with job costing? Given the three factors that we looked at, which product can you think of whereby it's for a particular client? It is normally specialized production because it's a unique product. Do you guys have an idea? Can you give me an example? What can you think of a product that is unique, specific for a client, and specific for a client, and it is normally like a once-off or a specialized order? Can you guys think of one? Just think generally some of the stuff that that are out there in the market that are being produced. Which product can you think of your head that goes along the description that I gave you now? Okay, maybe let's speak in the car industry. Can you think of any car that speaks to what I've mentioned? Particular client, specialized order, and it's normally unique.
I would say, in terms of the job costing, if somebody came up with specifications to say, I want you to manufacture this type of jet with these specifications, obviously that will fall under job costing.
Yeah, and if you look at the size of a private jet, you can see that you can't put it on a continuous process. Like you can't just be on an assembly build where it's just probably it's per order. Then that's when they will do a private jet. Another one you can think of is your cars, like your Lamborghinis and stuff. They normally have a special edition where a person comes and it's a custom made car and they won't repeat that type of car again. So that's like a special order, right? And for a particular client who comes with specific requirements. Then under process costing, it's anything that you can think of, your phones, your certain cars, what else? Your food, clothing, process costing, because they all are alike, right? They all alike. It's normally for a general market, and it's a continuous process. So you need to be able to apply what we're speaking of into your reality, your life, just to say, okay, so what type of examples do we have there that are out there, so that you can contextualize and be able to make sure that you understand the topic clearly. It's easier to understand a topic when you can relate and make examples for yourself. All right. Cool. All right, so I'm going to continue. That's part of job costing. Then, so job costing, well, now we get into the definition. The method is where goods are manufactured. Like I've said, client comes with the specifications and the product is different. Then you will have to determine the cost per unit. Okay. So at the end of the day, you need to aggregate and take into account all the costs that are related to producing the product, and then get your cost per unit. What unit that you think about it. Okay. And then we spoke about the documents that are very important in this system. And one of them is the requisition form. Because as we've mentioned, it's very important for the client to specify what they want, what are their specifications for the product that you will be producing for them. So there will be a requisition. This requisition will help you to now come up with your production order, because once you know the specifications of this order that you're doing, you'll then be able to know what type of material you need, the type of labor that you need for this, and also the overheads that you probably will incur related to the specifications of the client. All these costs will be accumulated on a job card. This job card is what will have your order for material, the labor that was used, and the overheads. They will be on your job card. And it's from this job card, because think about it, all the cost will be on this job card. That's where you'll be able to calculate what is the cost per unit. If you get what I mean. So just have that in mind, that job thing, specific time product, and the production is normally per order or it's one off. And all these costs, they go on a job card, and it all begins from a requisition form, and then it goes to an order form. Then from the order form, that's when you can be able to see what type of material. Then you can start thinking about the labor that you need in order for you to produce this product. Any questions so far? I'm going to take silence as no. Then we're moving into the general part. The general part is when look at your T accounts, right? You say that what falls under my direct material inventory account. You look at your debits and your credits. What have you purchased? What are you issuing out to that specific job? As you can see from this T account, there's as you can see from this T account, you can see that you might have some material that you there might be some material that you originally purchased or that comes from the previous production that you had, and you've paid for it, but then now you start allocating it to different jobs. All right. So the T account, you need to be able to identify maybe the material that were leftovers and also see the ones that you purchased for that job, and then start allocating to the different jobs. So you can start seeing that, yeah, that it's now transferred out of the direct material inventory account into job one. Direct material goes to job two. And you can see from job one, it's where this is a job card type of thing in a way, but in a T account format, where now you can see the direct material that came in, the labor, the manufacturing overheads. Then once it's a completed good, you then take it to completed T account. Same thing with your salaries, same thing. You recognize the payment that you've made to your people, and then you allocate it to that specific job. So at the end of the day, each product will have the direct labor, as I've mentioned, direct material, and manufacturing overhead. So now question comes as to how do you normally get tested? Um, how do you normally get tested when it comes to job costing? Most of the time, the questions are in multiple question type of format. So that means that you need to know your theory very well. Know your theory very well, so that by the time that you approach that multiple question, you don't waste time. Just know how to apply what you just covered around job costing, and you give them the correct answer. Okay. I've mentioned again, so this is a summary of what job costing is. You need to know when to use it. And for you to know when to use it, you need to look at your market, production, and the product. Those are the three things that you need to know. Where to use it. It can be in manufacturing companies, it could be service, it could be consulting. Anyway, it could be used. It all depends on the market, the production, and the product. You need to know the flow of documents that you have. In terms of the different documents, the requisition, your job cards, be familiar with that wording, right? Because it helps you with those multiple questions. And then understand the flow of the ledger accounts. That's what we're looking at here. To say that recognize that you have a material T account and a salary one, but you need to then allocate them to the specific jobs that you'll be working with. And within that, there will be also manufacturing overheads. Okay, before I go to process costing, I just want to check the exam that I'm referring to here, and then just test if you guys are following, not test, but you guys could also use it as a way of seeing where you are, right? I said it is question 1.5. I'm going to look at this question, and please give me the answer. It's a quick one. So the question is, you see, if you can see from here, this was the October exam. Question 1 was worth 20 marks. You see why it's important that you get your theory right. So it is 20 marks and it's multiple questions. You get two marks per question. So that means that you have 10 questions, but then you are marked 2 for giving the answer. And you must just give them the right answer. So let's go to 1.5. I will read on this. Please give me the correct answer. Yeah. Okay, cool. Perfect. Jumbo Plumbing Services is in the process of implementing a cost system and requires the expertise of the management accountant. Their manager, postman, approaches you for advice. Which one of the following is not true about job costing? So can you guys see the screen? A says that job costing is appropriate where homogeneous products are manufactured using the same production facilities. B says that states that job costing is appropriate where heterogeneous products are manufactured using the same production facilities. C, a common example of a business where job costing is applied is at a workshop where repairs are carried out on different vehicles and where the cost of repairs to each vehicle is calculated separately. D, job costing is not appropriate in industries where large quantities of similar products pass through a single process or consecutive process in the course of production. So from these four statements, which one is not true about job costing? I'll give you guys a bit of time. Read again the options that you have, and then please put them in the chat box. So yeah, please look at the options and then please type your answers in the chat box.
I've just realized that I made a mistake. Actually, job costing is appropriate where heterogeneous products are manufactured.
Okay. So which one would you then choose now? Given the knowledge that you have. Which one is not true then? Ladies, which one would you choose? Which one I mean, why did you choose A?
I think job costing is, I chose A because job costing is mostly for products that are unique.
Yeah.
Yes, that's why I chose A, because
Okay.
of that.
Thank you. Ladies is right. A is the correct answer, like she mentioned. So homogeneous, it means that they are alike. Remember from the table that we looked at, but also even English. So homogeneous means alike, and job costing is not for products that are alike, that are all alike. It's for unique, unique products. So yes, the correct answer is A. Not, are we all together, right? It makes sense, right? So those are the type of questions that you will probably encounter when it comes to job costing. You just have to be, as I've mentioned, know your theory, understand what each word means or what it could stand for, so that you don't get caught up in the multiple question. All right, so that's job costing. Now we're going to enter into process costing. So with process costing, it will be a bit of theory, so please bear with me. But as you go along, you will see that the theory helps you to understand how to calculate, when to apply, and then it makes it a bit easier for you to understand the principle of process costing as opposed to just doing questions for the sake of doing it. Okay, so we'll be looking at uses of process costing: production by means of single process, production by means of having a consecutive process. Also, as I've mentioned, since it's a costing system, you need to be able to allocate your cost. So that means that you also need to know the flows in your general ledger, and then how do you finally report it on an income statement, and also calculating the cost per unit under a single process, and then calculating the cost of unit under consecutive. So it means that you need to know what is a single process costing and which one is a consecutive process costing. Okay, but I think for you guys, with what we'll be covering, we'll be only doing single process and not consecutive. but you will see as we go what are the differences, just for the sake of general knowledge. But questions normally it's single process. Sure. So process costing, as we've mentioned from job cost in the introduction there, it's for homogeneous products. They are all alike. General market, and there's a process in terms of how you produce. And while you producing these products, you incur costs, right? And you need to be able to know at which stage are you incurring this what's this cost within this process. So at the beginning, you'll have certain inputs that you put in into your production. Those are costs, right? And you will need labor and certain overheads. I'm sorry about the noise. I did say that I am outside, but let me know if it's disturbing you even further. So you'll have your input. Those are normally your raw materials in this process, right? And then you will then have your people who will come and convert this raw material into what you want it to be. So that's when your labor comes into play. But if you think about it, you normally your labor will need a place for you to be doing the production. They will also need your electricity. They'll be using machines for this conversion process to happen. So part of the process is that there will be a stage where you're introducing labor, and there will be also a stage where you start incurring overheads, right? And depending on this process, it might be that at the end of this process, your products are partially completed, or they might be completed. So it's those points that you as a management accountant, you need to be aware of, because those points indicate where you incur your costs. And you'll be then be able to know how to allocate that cost. Because at the end of the day, we need to know how much are we spending for us to produce whatever product that we're doing. So I hope it makes sense. So that's an overview of what process costing is about. Right. So the units, as you've mentioned, they are identical and they are normally produced in bulk, because as we've mentioned, there's nothing special about the products that you're producing. They are all for a general market. So it would make sense that if you're gonna buy a machine that is worth $1 million, you might as well just produce in bulk, right? Not specific one by one, because it costs you a lot to produce. So you do things in bulk, and they are all identical. So that means that if there's a machine that screws in something on that product, you might as well just learn how to screw it faster and quicker and all in bulk than for you to do it 1 minute, one product. It will cost you a lot. Okay. So example of a single process is that here's the process. If you look at the timeline, there's materials that you'll be adding at the beginning. Materials are being issued at 100% at the beginning of the process. You haven't started with the conversions as yet. Then there's a conversion process. This conversion process involves labor and overheads, because as I've mentioned, you will need people. Those people will need to use electricity for the machines, right? Then at the end of this process, it's either you have a completed product or a partially completed product. That's a single process. Okay, so an example that I normally use, that I think that it's easy for people to follow, it is of baking a cake. Excuse me, guys. I think the sound fine. Can you guys hear me clearly, or the background sound too much? Please let me know.
We can still hear you.
Pardon?
We can still hear you.
Okay, so they're not disturbing you. as a cold?
Not at all.
Okay, great. That's a bit too loud. Thank you. Um, so as I was mentioning here with process costing, an example of a single process, it's when you bake a cake. So when you're baking a cake, if you think about it, at the beginning, you will have raw materials. That's when you would have purchased your flour, your milk, your sugar, your butter, your eggs. Um, and that would be the beginning of you baking this cake. Part of converting these ingredients into a cake, what you'll be doing is that there's labor. So there will be someone who needs to now mix these raw material, right? You'll be mixing your flour, your milk, and your sugar. Some people whip, or they'll be whipping and using certain machines to mix all these ingredients. So that's a machine that uses what? Electricity. So if you think about it, those are your overheads. So there's someone who's mixing and they are using machines that use electricity. So those are your conversion costs. So you'll be mixing and then thereafter you put also your mixture into an oven because it's still not completed. An oven is also a cost and it uses electricity. So as a result, there is still part of your conversion cost. After some time, the cake is ready. You put some icing, you put some decorations, then you have a cake. That's a single process, but you can see that from the minute that you bought these ingredients till you got a cake, there's certain pinpoints, there's certain points where you are incurring costs. And as a manufacturer or as a baker, you need to be aware of those costs because it would make sense when you doing pricing of your cakes to say that this cake is 500. You need to be able to have seen the pinpoints of saying, all right, it takes me this long to have this cake ready. It takes me this long to ice. It takes, I mean, icing on the cake. It takes me, I consume this amount of electricity for me to bake this cake. I use, maybe you even pay yourself. I'm the labor. I need to get compensated for using my time. So it's all those things that you need to take into account. Say these are all my costs, cost per cake, and then you put in your margin. Then you'll have your profit and selling price. Okay. Um. Okay. So I hope you guys understand that process. That's a single process. It's one process. It's done. Then, as I've mentioned, you need to know what's the average cost per unit per process that you do, because that helps you with tracking your profit. Now, consecutive um, consecutive process. How does it work? Okay, so consecutive process, as we've mentioned, it is one of having multiple processes before you get to the final product. So I normally use the example of coffee, having a final product of a packaged coffee. So how does it work? At the beginning, the first process that you go through, it's the one of roasting your coffee beans. So the beginning, you'll have these raw coffee beans that you probably imported, and then you have to put them in an oven. That will be process number one. Then at the end of process one, you only have roasted beans. These beans, you can't sell them as yet. You still need to go and package them, right? So you take those roasted beans, they become the input of process two, where the milling of the beans happens. So this is when they are grind. You start grinding those. They end up being ground coffee. Still, you can't just take those ground coffee and just sell it because you still need to go and package it and seal it. So the ground coffee ends up being the input of process 3, which is where you are filling it into a bag and you seal it. Then that's a final product, a final packaged coffee bag that you now can sell in your shops or to your consumers. So do you guys see that this is a consecutive? There were almost 3 processes before the final one that you had to go through. Okay, so that's consecutive process costing. Are there any questions related to the two?
Happy?
Okay, so if you guys don't have any questions, that's the beginning of what process costing is and the elements that you need to be aware of to say that there's a single process, there's also consecutive, how you treat each. But if you can look at it, it's all about your inputs, conversion process, and the final stage, which is when you have final completed product. But do be like you need to be aware. Ish, my battery's gonna just you need to be aware that there are certain instances whereby you will have certain losses that you incur. So you need to be aware that the process is never a perfect one, right? As I've mentioned, you're not certain that at all times you will finish your product. Sometimes it's partially completed, but you still need to take into account the cost during that process until you continue and get a final product. And as I've mentioned, there's certain instances where you experience losses, and these losses are either normal or abnormal. Meaning, normal ones, they are, you find that they're not within your control. There's certain losses that you incur whereby they are not within your control. They come with the process. So let's say, for example, with the coffee, there's certain granules of coffee beans, or once you, especially after getting ground coffee, that you might lose, or you find that they vanish because of roasting. Certain parts of your raw coffee beans that you will lose based on the energy that you put on those. I'm just saying that you might lose them. So that's part of the process. As a result, it's a normal loss. But then there's others that are abnormal losses. So those are the things that we'll get into as we look into process costing. That be alert that yes, single process, understand input conversion, final, but life happens, and as a result, might experience losses, and they might be normal or abnormal, and you might not be able to final product. Therefore, you have to adjust. But still, at the end, the essence is you need to account for that cost. Okay, so that was part one of process costing, the theory. Now, I want us to look at part two of process costing. Okay, so now, as I've mentioned, there's certain elements to process costing that now we need to look at. Work in process, equivalent units, and the quantity statement. Those are other elements that take into account a situation where you don't complete your, your production, right? Okay, this I've covered, I've covered. So the elements that we're looking at, this is the overview. Work in process, meaning it's not completed, but it's a work in process. How do you deal with it? You need to be able to calculate an equivalent unit. An equivalent unit is trying to get the cost for this WIP. So there's raw materials, labor, and prior process. So how do we account for that when we are calculating for cost? What is the impact of your valuation method on process costing? So what I mean, it's your first in, first out, your weighted average. How do they impact you calculating your cost for this process that you are doing, producing? Quantity statement. What is a quantity statement? How does it look like? We'll be looking at those elements when we're doing process costing. And then the statement, how does it take opening work in process into account? Meaning, maybe let's say you were doing the cake and now you are left with the dough. You now need to take it into the next stage. It's a work in process, not a cake as yet. How do you take that dough to the next process that you go into? Just making a silly example. Completed current current production. How do you treat it when it's completed within quantity statement? And closing work in process and losses, as I've mentioned. Then valuation methods of weighted average and FIFO. So as you can see, process costing is quite extensive, it's quite big. It's important that you understand it because it has a lot of elements in it, and most of the time in the exams, it also weighs a lot because as you can see, it has a lot of elements to it. But once you get and grasp the principles, you should be able to apply them. Just going to show an example. Cool. Yeah, here it is. Of a work in process. So here, they'll give us an example. You say that these are partially completed units, as I've mentioned, right? So we need to assume that the cost for 100 units were 60% completed. It's not completed, but it's partially. It's 60% completed. Sorry. And then the cost for 40 units are 30% complete. So how do you do an equivalent costing? So if a unit cost 40 Rand per unit to manufacture and it's 60% complete and you had 200 work in process units that you're dealing with, how do you value that? Your valuation of this equivalent unit would be taking your 200 work in process units and then you apportion either the cost or you apportion the unit itself. But in most of the time, how we calculate equivalent units is apportioning your units and then apply the cost. You'll see it as we go to say that you need to take into account that at the end of the day, 60% is only completed. That means that you need to take into account 60% of this 200 units and then apply the cost. This cost is the one that will have your raw material, your direct material, your overheads. Hence, it's 40 Rand. I'd rather you apply the 60% on the units as opposed to on the rate. That's high level of how do we normally take into account equivalent units, what it means and how it looks like. Okay. Another thing that I want us to go through is the raw material in terms of how do you take into account raw material. Raw material in most instances, you put it in at 0%. So that means that it comes in at 100. complete. Raw materials, they come as complete. So you never get a thing where now you have to do this example that we were looking at now, where you have to apportion for it. It normally comes at 100% because it's at the beginning of the process. It's at 0%. I hope that makes sense. That raw materials comes in at 100 because it's at the beginning of the process. All clear? Please don't forget that. The trouble comes with your conversion, where sometimes it might be that conversion only came when the process was 30% in or 60%, 65. That's where now you will need to apportion for your labor and overheads costs. Because, for instance, as I've said, when you're making a cake, the oven comes maybe when you have a dough and you put it in a tray, and that might be when it's about to be like 60% of the whole process. So take note as to at which point did we incur the certain cost. Any questions so far? I hope you guys are following, but you can always look back at the recording just to verify certain things. And I also say that go and read so that you can follow what I'm talking about. Sometimes it's difficult to follow when you haven't read the topic. So before we look at the example, so prior process with is when, as I've mentioned, in the single process that you did, you didn't have a completed set of cakes that you were making. They were partially completed. So now you need to continue making them. So let's say, for example, it happens that when I was baking the cake, load shedding happened. That means that I have a partially completed cake. Once load shedding comes, once it's off and now my electricity is back, I can continue. So it was part of the prior process. Now I'm starting a new process. I need to take that prior process as if it was 100% because now I'm starting a new process to start counting for the cost. So please bear in mind that you will have prior processes where it was partially completed in the previous, or it might be even completed. Let's say the part where the cake is now done. I need to now put it into icing where I'm decorating it. Now I'm putting, you know how nowadays cakes they put on even animals or cartoons on top of the cake. That's a process in itself. So let's say the first process is make a cake, then you have to take that cake and start decorating it in order to get it to a situation where you can start selling it to the client that you want to, who wanted that specific cake. So with that being said, the prior process would be you just having a cake that's ready. It has been put into the oven and it's ready to be taken for decoration. So that means that when the cake comes into the decoration part, it has to come in at 100%. It's not raw material, but it's a cake. But it's coming into the second process at 100%. Are we all together on the example that I just made?
Yep.
Where I'm trying to illustrate what a prior process would be. It's not final yet, but I still need to put on the icing and the decoration. I hope that makes sense. Okay, I'll continue. So here, it's activity 15.1. Okay, can I give it to you? Just do it quickly, just to apply, because it's basic questions. Try and apply what we're speaking of. Equivalence, opening with, closing with, units that are completed. Try to apply just basic logic to this question. And then let's see, because I just want to judge where you guys are. So now this question, it's an example. The activity 15.5, 15.1. So it says that Jumpy Juice manufactures fruit juice in a single process, and they make use of process costing. These are the following information that you've obtained. So you have an opening WIP. That means that it comes from the previous process. So your opening WIP, it is 70,000 units and it is 75% complete. Then in this process of making this juice, you've put in new units into the production that are new, and they are 230,000 units. Then you have closing WIP, and this closing WIP, it was 20% complete. Your conversions, your labor and your overheads were 20%. Material is added at the beginning and your conversion takes place evenly. So your question is, calculate the equivalent units for your opening WIP. What would be your equivalent units for your opening WIP? B, what would be the production work required to complete your opening WIP? And then calculate the units that are completed, and then also the equivalent units for your closing WIP. Straightforward, no? So you need to calculate what is the equivalent units for your opening WIP, what is the work that still needs to, the production work that still needs to be done in order for you to complete this opening WIP, which units are completed from this whole process, and what is the equivalent unit for your closing WIP. Can I give you 15 minutes to calculate this? Is that fine? So 15 minutes, try attempt this example. 15 minutes. I want to give you ample time so that you can apply yourself, and then we look at the solutions together. Is that fine? 15 minutes. I'm gonna mute myself as usual. 15 minutes, do the question, and then we come back and go through the solution. It's not complicated. I'm just giving you 15 minutes because I'm just not sure as to how many people have looked at process costing. But let's use 15 minutes. Try attempt the question. It's an activity, it's an example, and then we'll talk later. Okay, so 15 minutes starts now. Just do the example quickly. Once you're done, just let me know in the chat box, but I'll give everyone 15 minutes. That's fine. Hope it is. You guys are too quiet today. So 15 minutes starts now. I just want to hear your views on us, class views. How do you attempt the question before we go to the solution? So any takers who would like to just, even if it's A, how did you guys attempt calculating the equivalent units of the opening? How did you guys go about A and B in terms of the production units that are remaining for us to complete opening? So now the floor is open to you guys. How did you approach A and B before we go to the solution?
I think on my side, I said, okay, in order to get the equivalent of units, in A, I said 70,000 multiplied by 75%, that gave me 52,500.
Okay. And B?
B, I said then, okay, it will be 70,000 multiplied by 25%, or 70,000 minus the 52,500, which I got on A. So that gave me 17,500.
Okay, cool. Thanks. I think because of time, let's look at the solution. Thanks for attempting the question. It helps attempting the question because at least we can all discuss and you don't do it alone. So in terms of, sorry, I passed by quickly. Solution. Yes. So, wait. Yeah, cool. So the equivalent units for separately for material and conversion. So material, we always said that material is included at 100%, whether it's coming from the previous or it's for that current production, it's always at 100%. But for conversion is what you were saying, to say that 75, because remember I told you that conversion cost, think about it as labor and overheads. Like I've mentioned about the oven or the electricity, it's at a point in time. So it's the one that we always apportion for. But if it's for material is at 100%. Okay. So yes, you're right. It's 52 for conversion, but I'm just illustrating that it's for conversion cost. Then B, they said the production work required to complete the opening work. So since material was at 100%, that means that it will be 0 units, but it's 100 minus the 100, and you've got 0 units because they already included all of them. However, the conversion cost element is the one that still said that it's either the percentage, which is 25%, or you take that 70,000, you minus the 52 that you calculated from A. Any questions thus far before I go to C and D? Well together, right? Straight forward. Then the units completed. How do we calculate the units completed? Here, you take your opening WIP, you add the units that were put into production, and you minus the closing WIP. This is the 70,000 plus the 230 minus the 50, and then it gives you 250 units. These units have been completed thus far in terms of both material and conversion. Then they asked you to calculate the closing WIP. Same principles for materials. Materials would be at 100%, but then conversion, you need to calculate it based on the rate. Any questions related to the activity that we just did? Or is it clear? This is where you guys talk. Is it clear? Any questions you might have?
Yeah, for me, I think I got all 4 correct, although it doesn't mean that I've mastered process costing.
Yes, of course, because it's just the entry questions, just testing if you are following the principles. Because then once we add your quantity statement and all of those elements, at the end of the day, it's just following this concept that we just covered. So get the basis right, then by the time we build up and add more meat to process costing, you will then get to a point where you're just like, oh, I now see the principle. But I'm glad that you guys are following and you are able to apply what we just covered in terms of theory. Okay. Thanks, Timothy. I'm glad that you also attended and you got the answers right considering load shedding. So now, so that was like basic. I now need to get into the valuation method. As I've mentioned, today it's a bit of theory, so please bear with me. There's lots that we're covering, but it will build up to the homework that I'll give you. Because obviously this homework that we will then discuss on Wednesday when we meet. So I want us, we just did this. We spoke about work in process. We just did this calc. Now we're looking at inventory valuation methods. That's what I want us to look at. Okay, so now in this one, we are looking at weighted average method and first in, first out. So weighted average method, it's a pool of units and that are valued at an average amount per unit. So you average out the cost. So each and every single unit will be having a different cost to it, but you will weight it out. You do the weighting of all those costs versus all the units that we have, and then you will have your cost per unit, a weighted average cost per unit. First in, first out, on the other hand, the units have different values depending to where the production, where it comes from. However, the oldest inventory is deemed to be the first one that we will sell, right? So first in, first out means that the oldest inventory is the first one that we sell. Okay, so now question comes, how do we then value incompleted units in terms of first in, first out and weighted average? So in terms of first in, first out, the units completed in the current period transferred to the finished store are split. You split them between the ones that are related to the previous process and the ones that are related to the current. Please be aware of that. In terms of valuing first in, first out, you split it into two. One, opening with, meaning the previous process, and then the current production period. Note that NB. Weighted average, on the other hand, you don't split. In other words, we just weighting. Our weighting will be inclusive of the previous process and also the current period production. Then we weight both of them, and then we get an average amount per unit. Whereas first in, first out, you split. So please know, as I'm going by, we'll be looking at different rules that are related to first in, first out. So the first one is the one that I just mentioned. First in, first out, you split. Weighted average, you weight both previous and the current. Sure. So I hope that makes sense. Now, quantity statement. So how does a quantity statement look like and what is it? A quantity statement, it's a summary, a statement that shows summary of the flow of these physical units that are part of this process costing. So it will include the units that you've used at the beginning as your input. What are they? Are they coming from the previous process or are they current production? And labor, material. Then what outputs do you have in terms of units? You put it in there. Then there's the equivalent units portion. Remember the example that we were doing? You had to separate it between material and conversion costs. So equivalent units, we know that certain raw materials, they come in at, not certain, but materials come in at 100%. So you put in your unit and show the 100%. However, conversion, that's where you take into account the completion state. Is it 75%? Is it 60%? You put it in. The quantity statement summarizes the flow of your physical input, units. That's what the statement is all about. Okay, so now, as I've mentioned, there are rules related to using the inventory methods. When it comes to first in, first out, besides splitting between opening with and the current production units, you need to, you need to be able to look at how do we treat this opening WIP that they said that we must split under first in, first out. Okay, so here is the rule. The rule says that the percentages to use in order to calculate the equivalent units of the opening WIP, you must determine by calculated how much work still needs to be done for us to complete this opening WIP in the current period. So remember from the example that we were looking at, we said that, yes, we calculated the conversion cost to say it's 70,000 multiplied by, I think it was 75%. Then he gave you 52,500, I think. Then the next question asks you how much more work still needs to be done for this opening WIP. So that's the same guidance that you take under the first in, first out to say that ask yourself how much work still needs to be done for us to complete this opening WIP in this current period. In that instance, it was the 25%. So that's what you need to think of. That first in, first out at the beginning, I split it into opening WIP and current production. Under opening WIP, when it comes to my equivalent units, I need to determine how much work do we still need to do in this current period to complete my opening WIP. Okay. Then opening WIP covered. Next one that we split into is the current production. What does FIFO first in, first out say? So it says that when first in, first out method of the inventory valuation is used, we usually have a balancing figure for the number of units that are completed in the current production. These units should be included at 100% because they are fully completed. That means that for you to get your current production unit number on your quantity statement, this would be your balancing figure. You will minus whatever that you have, which is your opening WIP, from what you calculated as part of your quantity statement. You see the example, the balancing figure would be your current production. Weighted average on the other side, as I said, it weights both your current production and your opening. So in terms of first in, first out, what it's telling us is that current production, it's always at 100% for both material and conversion cost. Since it's a balancing figure, we assuming that everything is completed. Closing WIP, how is it treated? So the closing WIP is not influenced by the working inventory valuation method, meaning it's not affected by first in, first out and your weighted average. You just use the percentage of completion against your WIP. Remember the example that we just did now? You were taking the units and you were multiplying it by 20%. That's it. There's no other rules. The inventory valuation doesn't affect your closing WIP. So in summary, what are we saying? In summary, you've learned that how to basically calculate your equivalent units under material and under conversion costs. You also learned that under first in, first out, you need to split between opening WIP and also current production. Opening WIP material, it is at 0% because we said that when you calculate the equivalent units, you must say how much do we still need to produce in this current period in order to complete our opening with. Because remember, first in first out said the oldest inventory is the one that we sell. So that means that we need to prioritize completing the oldest inventory first before we start with the current. So that means that for material, since material, I said it always comes at 100, that means that 100 needs to be completed, it's 0. Nothing needs to be done in terms of opening with when it comes to material. But when it comes to conversion, you need to take into account the completion percentage of your opening with. Under first in, first out, the current production, it's always completed in terms of material and conversion. It's always at 100. Under weighted average, both material and conversion are at 100% because we weighed everything together. Closing loop, on the other hand, is not influenced by the inventory valuation method. That means that your material is at 100 and your conversion is a percentage of closing loop. Any questions before we do a question? I hope all is clear and it makes sense what we just covered. Know those rules by heart because I'm telling you, they will make your life way much easier than when you don't. Okay, so if you guys are not saying anything, that means that it's easy to follow. I just want us to look at another example. Self-assessment example to do your equivalent units under first in, first out, and one under weighted average. Let's do it now. Here's the self-assessment, and then we mark it together. Okay, let me share. You'll need to be quick. 15 minutes tops. I was gonna say 5, but I'm just looking at the time. Yeah, so 10 minutes tops. So what does the question ask you? Tasteful Textile manufactures waterproof fabric in a single process and makes use of process costing. The material added at the beginning of the process and conversions is done evenly throughout the process. The following information is available for 2017. You have your opening WIP of 30,000. You have your conversions of 60. New units that started, it's a 500,000. Units that were completed at the end was 490. Closing WIP is 40,000. Conversion is 30%. So they're asking you now, please do a quantity statement where you are showing the first thing, quantity statement where you're applying first in, first out, and where you are also applying weighted average method. So let's do this quickly. 5 minutes per question. So do A and B, so 10 minutes, and then let's then come back and look at both solutions, and then I'll also give you the homework, then we'll be done. So please guys, 5 minutes per question, try answer. I'll check on you after 5 minutes just to say, are you done with first in, first out, so that I can judge and see where you are in terms of writing. Cool. 5 minutes, let's start. Go. How did you guys find the question?
I think on the FIFO part, I think I could understand it. When it comes to weighted average, I struggle there with that quantity statement.
Okay, so let's look at it because I'm just looking at the time. We've got 5 minutes left. So first thing first out, you had to take into account the opening WIP, which is the opening units of 30,000. Then the what you put into production being the 500,000. So total inputs that you have, it's 530. Okay. Then your output, this is where now you start splitting, right? You say opening WIP is 30,000. Raw material, as we've said, first rule says it's at 0%. But then on the conversion cost, you have to look at what more do we still need to do to complete this opening WIP, and it's 40%, hence the 12,000. Current production, it's the 460. It's a balancing figure. So let's look at one. The balancing figure, it's 490 minus the 80,000. Okay. And 490 is your completed transferred units that they gave you. So you say 490 minus that 30, it gives you 460. And raw material is at 100% and conversion will be at 100%. You add the conversion, you add the raw material. Then you're closing WIP 40,000, and you know that raw material is at 100%, so it's at 40,000, and then you have to then put in the 30% conversion rate. Then that's basically first in, first out. But this was illustrating the examples that we were talking about, right? I mean, the rules that we went about for first in, first out. So I hope that one was fine. Weighted average, on the other hand, which is what you were talking about to say that let's see how it works. Same thing in terms of inputs, 3,500 straight. Now, what's interesting is that when it comes to the output, we do not split. We put that 490 because we said this 490 is inclusive of both the opening WIP and the current production. And this 490, it's at 100%. So it's 100% raw, 100% conversion. So it's straight. Then the closing WIP is the same thing as under first in, first out because it's not affected by the inventory valuation method. So it's 40,000, 100%, and 30, and that's that. Any questions? Do you guys now see the difference between weighted and first in, first out?
Well, I'll say yes and no. I'll need to go back and practice.
Yeah, so under weighted average, you take the completed production units as they are, because you're saying that it's inclusive. You don't split, so you take into account the fact that the opening WIP and the current production, it's within this 490. So you take 490 as it is, and it's at 100. But under first in, first out, you have to split into opening WIP and also into current production, and then treat it as they've been. So I'd say still go back, as you've mentioned, to try see the two. But the example that we're doing now, it indicates exactly what we were covering in terms of rules and how to go about process costing using the inventory valuation of first in, first out. How does it impact the quantity statement? Okay, so with that being said, our recording has stopped.